Welcome to Java. Thank you all very kindly for joining me. It's December 2nd, 2024, and it is also Monday. So I hope everyone had a wonderful weekend, rested up and ready to go for what is coming into the rest of the year and the final month. Now, it is also more specifically Cyber Monday. This is the extension online of the shopping spree that Americans typically do after the Thanksgiving holiday. Now, this is giving a major boost to the retailers, and we'll speak a little bit more about that in a moment. We've also got some Ripple in the news here that we are looking at, as well as some of the dynamics that are working in the stock market this morning. So, with this, let's get started with our favorite risk indicators. Now, the MMRI is down at 278.3. Now, with this coming down, we've got the 10-year yield and relative strength of the dollar both gaining ground. So this morning, both of those getting stronger. Now, a look at the fear greed meter is showing that retailers not affected by the low volume on Friday or the shortened days were still very strongly into the greed territory. A lot of the new money or basically lower end retailers still in the markets here. Now let's go over a few more things that are driving this. First, we've got the 10-year yield is at 4.208. Now it's up significantly from Friday, and I'll cover why in just a moment because we've also got the relative strength of the dollar back up over 106, 106.2 to be more particular. Now, we've got cryptocurrencies are down under some pressure, with the exception of XRP, which is also known as Ripple. Now, Ripple above, as we left on Friday, I was speaking about it, it was at the $1.90 level. It is now above $2.30. So a significant increase. And a lot of this is on, as I was saying, for Sunday yesterday for these markets open, that there are some other things in the works. The SEC lawsuits are kind of winding down, if you will. And there's also talk about wider use for this. So spoke about the details yesterday in the Sunday video. So with this, let's go back to what's going on with the 10-year yield. Now, this story saying that the bond yields are rising after the Trump tariff threat. What this is speaking about is that the incoming administration saying that they will threaten tariffs on BRICS nations at 100% if they don't play along with the new rules that are coming into this. So, with this, a lot of the foreign nations are not only selling the bonds off in order to get US dollars so that they can stay in the trade game, but also this strengthened the dollar. Now, of all of the currencies, we saw only two that had relative strength. The first is the US dollar. The second is the Japanese yen. Now, the yen is up on the central bank. They're saying that they are talking about rate hikes again. Now, if they hike the rates on their debt, that strengthens the local currency. So we've got the US dollar and the Japanese yen both stronger this morning, and this is pressuring other currencies. So we've got the ECB talking about cutting rates in December. But if they do this, this will put the euro into kind of a short-term free fall. And right now, with these other two things going on, the euro is getting hit. So very weak this morning. That will affect their markets going into the green. Now, as those go in the green, the combination of the 10-year yield and relative strength of the dollar, I expect will pressure United States stock markets. Now, it's looking right now still in the green for these stocks. This is leftover from Friday. And the futures are beginning to look forward into also this weakness that those will create. So, little caution on the markets for the United States. This is not a major hit, it doesn't look like, but it does look like it will retrace as of today. Short term retrace was hitting most of the indices were hitting a bit of resistance. So the sentiment right now between the tariffs, BRICS volatility index, or the VIX, is up significantly, and between the US dollar and the yields up, expectations of weak market shortly after open if they're not already weak by the time they open. So keep an eye out for that. We're also watching crude oil is up. Now this is on a couple of things. First, on Middle East tensions, but also they are seeing an increase in the demand for this over in China. So we're watching production in China kind of recover a bit, as well as some trade down in the chip sectors. So with this, we've got the warning coming out that the stock market that the investors have been rallying into might get a reality check from the jobs data. Now, today, for the calendar, we're not getting much of jobs data. We're getting mostly PMI and construction spending, but we are expecting job openings early tomorrow morning, as well as auto sales. Now, the combination of the two of these could make a significant difference. The last jobs reports came out significantly lower than they were expecting. They did blame them on the strike, so we'll see how that affects this, but more likely tomorrow will start today. I don't expect a lot of effect from that. So what we do have going on in the real economy, factory activity is slipping in November amid weakening global conditions. Now we're seeing the lower manufacturing and production going into inflationary environments. This is stagflation that we're seeing beginning. They are just not calling it out yet. So a couple other things in the news. Stellantis, which is the company that is the maker of Jeep, Dodge, the CEO has stepped down. So this is pressuring their stocks. They've got massive overflow of their inventories. They're talking about halts, cutting their labor force, closing factories possibly, and restructuring. So now that the CEO has basically dropped out, it's giving that stock a major hit this morning. And the car market in general, it's not just this company. We're watching Volkswagen also having workers are starting strike across Germany this morning. So auto workers, for a lack of demand, they're beginning to take major hits. Now, as today is Cyber Monday, we obviously don't have the numbers yet, but we are beginning to get preliminary reports from the Black Friday as well as Thanksgiving Day. Spending hit a record after all of the large discounts that they see. Now, the more important numbers, as I was saying yesterday, are the composition of what people, first of all, purchased. Secondly, a large amount of these purchases were done either on credit, through debt, or the newer form of credit, which is the BNPL, standing for buy now, pay later. And I've spoken before about why this is a trouble, because this will come back to bite later. Now, if they get these buy now, pay later loans, they can't afford them now. They're high interest, typically above mid 20% to high 29%, 24, 29% typically. So if they're paying these high percentages on top of this, there's a large possibility they won't pay these back. Now, I also went over the K-shaped recovery. This was due mainly into businesses. So in relation to businesses, different sectors recovering at different rates. But I would like to bring this up also, and I did briefly mention it, that this K-shaped recovery also correlates to working class, if you will. So this is a perfect example. We had this crypto millionaire purchase this banana as quote unquote art for $6 million and proceeds to eat it. So while this gentleman standing here is eating a banana worth $6 million, we've got this poor gentleman standing right next to him. Who knows what he makes, but apparently not nearly as much as this guy. So we are watching the severe divergence in the classes, which is kind of heading toward a caste system. So we've got the lower end workers and we've got those that are accelerating into the elite class. Now, I've got one other uh, story that I would like to bring up. Aside from this crypto rally that they're talking about is causing a lot of these other bubbles, we've got artificial intelligence is another side of this. So we've got a new chip maker in town, Tens Torrent. They have just now secured $693 million in funding to go live. So they're looking down the road. It's a bit ambitious, but they are looking at competing with NVIDIA. So keep an eye on this as this could put a little bit of a different spin on that market. Okay, so I've got a couple of other stories that I wanted to bring up only because they do affect the larger perspective on things. So we've got the White House trying to do a massive surge of arms shipment to Kiev, a current administration stating out loud that they want to allocate every possible dollar spent prior to them leaving office. Now, they're purchasing this in the face of everything going on. There's more millions of dollars that they're trying to get out the door as soon as possible over to Ukraine. What is going on there now? Of course, massively inflationary again. It does take time to wind its way down into the spending, but this is going to be a problem with the spending a little bit later. Now, on the other side of this, we also had pardoning of the son of the current administration, despite what was said earlier, was repeated that this would not happen. Now, why I'm bringing this up is because this is undermining the confidence in what can happen as far as the United States and what they will hold to in the future. And this is getting major backlash, not just in the United States, but also abroad. So being brought up in a lot of multiple other news because it is such scandalous, really, but also this affects the overall trust in the sovereignty, which directs a lot of overall trade, finance, and a lot of other things that are going on. So, with all of this going on, there is the new plan to replace the current FBI director with a new one. And this is also kind of a hot topic, but they're saying that he is targeting the corruption that has happened within a lot of the higher political spheres. Don't have a lot of faith in this happening, but we'll see if there actually is a change made, just not just more promises. So, with this, I wish you all a wonderful trading day. Hope to see you a bit later in the Discord if you can. And until I see you again, my friends, stay free.